Hi, everyone, and welcome to another live trading series. It is Saturday, December 4th. I won't be doing any trades today, but I will be doing an income update. I haven't done this in 3 months, and a subscriber reminded me that I skipped September, October. I usually do every 2 months. So now I'm going to be doing September, October, November. You'll probably see the title of this video, something like I made $35,000 in options, but that's over 3 months. If you've probably been watching my previous income updates, I try to aim for $10,000 a month. I know it's bad to aim for something, but I do need to set goals. Like I can't trade willy-nilly. I have to try to search for patterns, search for something that make me at least $10,000. I do try to aim for 1.5% per month. I try to beat the market. I try to beat SPY. So I'm going to show you what worked, what didn't, why I'm scared, kind of. We'll get into it. This is going to be a bit of a longer video. People have been asking me to go into more detail, so here we go. If my sound is different, it's because I bought one of these bad boys. Shout out to Black Friday sales. So let's get right into it. September, I made $12,316. October, I made $9,733, a little less. November, I made $13,566. This involved a lot of managing and kind of correcting my errors from October, which did end up working out. So if we go to September, I made $24.25 off of strangles, almost $3,000 off covered calls, $1,000 off of naked calls. You'll see why this didn't work out in October. $1,000 off poor man's covered call. This is Tesla and Apple. And then 4,841 cash secured puts. These are my bread and butter. I'm going to slowly try to get back to more cash secured puts. What I want to show you, you notice not a lot of, so I rolled up at a loss, no big deal, but not a lot of negatives. You see here, like just a little one rolling up for $40 at a loss. But like you see, everything is positive. Nothing sticks out. So poor man's covered call, I was making a few hundred every week. I do want to show you, I think I was doing, so cash secured put, I made 300 here, 650 strike. The next week, this is 7 days, I did another cash secured put on Tesla, another 260, same strike. The week later, same strike. These are all 1 week cash secured puts. I made 300. Again, there's a lot of volatility on Tesla, so you can make a lot on it, but as you can see, if you check out what happened on Friday, it went down 6%, which is insane. So I didn't have any cash secured puts then, so I was pretty safe. These are all my standard plays, like at the money covered calls, expiring worthless, at the money covered calls for these two. Then my usual strangles. I'll show you how a strangle works until it doesn't. You need strangles, you need a stock to trade sideways. Nothing, I don't have any like teaching lessons here. Everything's just expiring worthless, and I've been rolling it and it's been going pretty well. October is when things hit the fan. So I start off immediately with a $5,000 loss on Moderna. So this is what happened. I was profitable on Thursday, and then on Friday, when I think someone announced that they had a pill for COVID and Moderna has an injection, so everyone started dumping Moderna. Let me try to show you where it was. So, no, this is way before. Here. What does it look like? This is all October. Let me go back further. Sorry, I should have prepped this in advance. All right, here it is. Moderna was at, let's say, $460, and I sold a 1 week or 2 week cash secured put, and it was doing fine up until it wasn't. I had to manage this October 1st. It went from, what is this, 388 to 326 in 1 day. So this is why I had 2 cash secured puts. I decided just to roll them down at a $5,000 loss because I was in trouble. I was deep in the money. I think I must have sold when Moderna was at like 460. I remember I sold at 420, rolled it down to 380, then 320. And then if you keep watching this chart, Moderna went from 350 all the way down to 215. And I still held on to those puts. I didn't want a bigger loss, so I held on to them because I had a lot of time. And then it ended up coming back. I closed them at a small profit, but I was This could have been avoided. I was 80-90% profitable, and then all I had to do was just close them early, and this would have been avoided. I could have avoided this big move. Kind of frustrating considering without these, like if I just made a normal play and didn't get greedy, I would have made $14,000 this month instead of just 9,000. But that's a learning, it's a learning lesson for me. Everything else worked out pretty well. Like I've just been doing my AMD and Square Strangles. I've been filming these, so if you want to see how these turned out, you can go back and watch my previous videos in October. Again, Tesla, cash secured put, buying. I've been doing these weekly and they've been working perfectly. I did end up selling 2 different ones here, so that's why I closed this for $8, closed this for $3, which is hilarious. So if you want to see, check this out. So I forgot about this. I sold this cash secured put 2 on October 14th, 700, 500, and I closed them the next day for $8 and $2, which is hilarious because Tesla mooned. So all my puts ended up being worthless and I just got my buying power back. I'm learning. I could have let these expire, but I'm trying to be smart. I'm not trying to be greedy, so I did close them out. I highlighted these 2 in green. I did, DWAC is like Trump's new, whatever it is, social media. It went public, and the volatility when a company goes public is insane. It was trading at 90 and I sold a 140 strike. I sold a 50. Oh yeah, I sold a strangle. 50 140 strike. So it needed to drop by 50% or pop by 50% in 25 days for me to be profitable. But take a look. The volatility died in 1 day. So I sold it October 25th. I closed it the next day, October 26th, for 50%, over 50% profit. So instead of 3,100 max profit, I made 1,794 in just 1 day, which is fantastic. In October, I made 38.17 off of Strangles, mainly because of DWAC, 3,900 off covered calls, 1,900 off naked calls. It's risky. 350 off credit spread. This is Amazon. I can't really afford to do anything naked on Amazon, so I did a credit spread for 7 days and it worked out pretty nicely. Poor man's covered call. I took a loss here because I'm rolling up my Tesla poor man's covered call just so I needed to avoid getting a sign, so I just rolled it up in strikes. I didn't have to take this loss, but I made more on the poor man's covered call than I did losing here, so it wasn't a big deal. And only $500 in cash secured puts, mainly because of this big loss. So if I take out this 5,000, if I was being normal, I would have made over 5,000 cash secured put, but I shouldn't really be talking like that. November is a doozy. So we scroll down to the bottom. 13,566. I did 60 trades in November. I did 30 trades in September. 1,700 in strangles, almost 7,000 in covered calls. I lost $1,200 in naked calls, 2,600 in credit spreads, 3,300 in iron condors. This was only Tesla. I lost $3,000 in shares. I'll show you why. $100 poor man's covered call, almost $3,000 cash secured puts. I made 2.3% on my investments here, so it's a pretty good return. I highlighted a few things. I just want to show you. I sold naked calls on Mara, and Mara ended up going from 40 to 80, and I sold 80 strike naked calls. So take a look at this run. So I think when it must have been like 56, I sold 80 strike, and then you see it went up to $81. This is an insane run. So it ended up going over 50% in, 2 weeks, and then it ended up tanking. So this tank actually really helped me out, but I don't know why I did this. As soon as it breached $80, I bought 1,000 shares because I sold 10 naked calls. Let me try to find the naked calls. Mara naked calls. I sold 10, 25 days, which is a stupid idea. I only made $987 here. So my whole trade, I lost $3,000 total, but just in shares, look at that. This is so dumb. Almost $4,000 lost just on this play. I rolled up from 80 to 85 at $1,000 loss just to avoid assignment because it was at $80. So I just rolled it up to 85 just to be more comfortable. When it breached 80, I bought 1,000 shares because what if it went to 90? What if it went to 100? Then I needed to turn this from a naked call to covered. So I bought the shares. it went from 80, it went to like 81, then went to 78. So I sold at a loss. It breached 80 again and I bought again. I'm never going to let, okay, so lesson learned from this, I'm never going to let my naked calls get that close, or if it gets breached, I'm going to do something, roll out further in time. My problem was I didn't roll it out in time. I wanted to get rid of it because the margin requirement went up from 100% to 500%. This increased so much, they changed the margin requirement on me. I was doing fine up until the margin requirement changed, and then I was in trouble. If we go to AMD, I highlighted everything blue here. Normally, I don't have to manage my strangles. When everything is trading sideways, which is what you want in a strangle, or if it increases or decreases slightly, everything is fine. But look how many times I had to manage the same strangle for AMD. Rolled up 8 strangles, added 14 days. I made $200. Rolled up, added another 14 days. We go down here, rolled up again, made $600. Rolled up again, made $500. But I increased to 9 strangles because I needed to widen my strikes because I was in trouble. It just kept increasing. If we keep going, here's where I started running out of buying power and I wasn't able to make any more money. I didn't want to go to 10 contracts or 11. I rolled down at a loss. I rolled up at a loss. It's been going so topsy-turvy. Look at how many trades I've done. Rolled up at a loss. And then if we go into December, I had to do, so December 1st, I had to manage it. And December 3rd, I had to manage it. Rolling down at a loss again. I am pretty nervous. I've been making just mistakes. Like, to be honest, if AMD keeps going down, like, I'm going to be in trouble. Like, if, I don't know. I've just been managing this poorly. I have 13 days left, 15 days left on these strangles, and I just want to get rid of it. The problem with AMD, it ended up increasing too much. I was doing strangles when AMD was near 100, and I was doing fine. Around here. You see, okay, so I did my charting previously, so I was bouncing off these 2 lines for months. I've been doing strangles on AMD for like 18 months. It's been going perfectly, and then it just keeps increasing. My problem is, to manage it, I had to keep the same number of contracts. So I was doing 8 contracts at $100, and then now I'm at 9 contracts at $140. So I'm using more of my buying power just to manage, and I am kind of nervous. Like, you see these wild swings. This is not a good chart for strangles because you just keep getting breached and you have to manage. So I manage it when it hits 160, and then it drops 4%, and now it's breaching my bottom side and it hits 140. So I'm pretty nervous. I have 14 more days. I just want to deal with it and just forget about it. I'll show you guys my income in December. But let's get back to November. 1,700 in strangles, almost 7. Oh, did I already do this? I might have already done this. 7,000 covered calls, lost 1,200 naked calls, credit spreads, iron condor. Sorry, I already did this. I'm going to skip this. Is there anything else I need to show you? Not really. My Tesla iron condor working pretty well. My put credit spread, I closed this at a gain. Where did I sell this? So I sold a call credit spread. Yeah, so I've been doing this credit spreads. I've been trying to do a few on Tesla. It's been working out pretty well. If you look at the chart at what happened yesterday, everything I've been monitoring is red. So if you look at the side over here, everything is red other than VIX. I wish I did some VIX calls, but I didn't. So everything I'm monitoring is red, but when you look at the S&P 500 chart, it looks like I need more consumer defensive. I need more healthcare, just so my entire portfolio doesn't go red all at the same time. If you guys want some updates, maybe if we go Tesla, just look at the covered call, poor man's covered call. This was worth, I was up $65,000 at one point on this leap, but then since Tesla dropped 6% just yesterday, I think I lost $20,000 in value in my leap just yesterday, which is insane. Like, it went down 6%, which is like $100. It was a lot. I'm making money on this, like, in the money call. I'm going to roll this up maybe from 870 to 900 and move it out to January. Right now it expires December 17th. I'll probably move this out to January 21st and then just try to manage and go from there. Is there anything else I want to show you? I was just breaking down my income. Nothing really. Square is in the money. Let me isolate that. So I sold 185 puts on Square, sold 3, and now they're in the money. I'm at a $1,400 loss. I can probably roll them out. I only have 11 days left. I could roll them out to January and probably make some money. Right now, Square's at 81, but you see why I sold like 85. I found support at 190, so I sold right under, and then that didn't really help. Everything went down yesterday, so my fault. Another one I'm losing money on, or I'm kind of stressed about. NIO. I sold NIO before all the Chinese stocks started to get like delisted or get in trouble in the US. I'm very nervous about this. I learned my lesson previously not to sell 10 right off the bat. So I sold 5 cash secured puts. I can move this down and sell up to 10. When NIO was 40, I sold the 35 strike. I have 11 days left. And right now NIO is, where's NIO? NIO is $32. Like, you see why it hadn't been near $30 in a while since May. So I was comfortable doing 35 and then maybe rolling down to 30. What I can do is move this to January and add 5 contracts. So 10 contracts is the max I'm willing to do on NIO, and it's the max I'm willing to sell on a ticker. So I can probably go from 35 to 32 or maybe 31 by adding 5 contracts and rolling it out. Ideally, NIO stays at 30 or above, or I'll be pretty nervous. But yeah, I think I'm going to leave it here. No trades today. I'm going to hopefully try to show more trades on Monday or Tuesday. I'm in the office a lot these days, so it's hard to trade or film. What I might do is trade and film myself, film my trades at the office over lunchtime and just do a voiceover later on to tell you what I did. But what I want to show people is managing this Iron Condor. I only did 10 days to expiration, and I ideally want to close it with 3-4 days left, which is Monday, Tuesday, and I should be profitable. Even though Tesla's moving against me, I should be able to close it out or do something. Yeah, I think I'll be fine. But hopefully no more red days next week. I'm hoping this isn't like a big coronavirus sell-off. I'm hoping it's more of a, like, hedge funds taking profits. It is kind of stressful, but like, you could see why you should own more stable companies. If you look at Apple down 1, Facebook down 1, Amazon, Google, everything is down like slightly, even Microsoft 2%. But if we scroll down to the riskier companies, NIO down 11, Inovio down 6%, Workhorse, garbage, down 5%. Everything, even by Nano Genomics, these are all like fake. Even, I don't know what's happening over the weekend, but Bitcoin and Ethereum are down like 10 and 5%, which is nuts, but I'll probably deal with that on Monday. This is probably a long video. Good income for this year, but for these 3 months, I'm probably going to lose money in December because I'll be taking a loss on Corsair. So I'll be minus 11,000. This will be I'm convinced December will be the first month where I have negative income. I've been profitable 11 months, more, I think like 15 months in a row. So it's time to take a hit, and I think Corsair will be my hit, which sucks, but I'll give you a full year income update, maybe end of December, maybe beginning of January. I'll see what my schedule looks like. Thanks for watching, and tune in to the next one.